Bitcoin's trillion-dollar boom, the cryptocurrency hitting a new milestone, topping $57,000 before sliding overnight. As you can see, it is at 55,000 this morning. Joining me right now is the former chairman of the U.S. Commodities Futures Trading Commission. He is now Digital Dollar Project co-founder and counselor at Wilkie Farr and Gallagher, senior counsel, Christopher Giancarlo. Christopher, it's great to have you this morning. Thanks very much for being here. I want to tap into your expertise in terms of what's going on with Bitcoin and the digital dollar. How do you see things changing in terms of digital assets in the coming years, and how soon will a transition take place?
Yeah, we're really seeing some interesting action going on, Maria. You know, we're seeing the traditional role of retail investors in this new asset class, especially in Bitcoin, with their comfort level with technology and their comfort level with the decentralization aspects of this. And they're actually antipathy toward the traditional financial system. But what's really changing is the growing role of institutional investors in this new asset class, with the likes of Mass Mutual and the United States' oldest bank, the Bank of New York Mellon, moving in a big way. And they really see this as both, on one hand, a hedge against inflation, but also almost like a new risk category of assets in a risk-on environment. And all this is made possible by innovations we brought to bear over the last 4 years, especially with the launch of Bitcoin futures back in 2017.
So what does this mean in terms of the regulatory framework? Lawmakers this week proposed legislation for a cryptocurrency task force that would look at the current regulations and recommend ways to improve markets to prevent fraud. You founded an early version of this task force while serving at the CFTC. So what do you expect regulators to find, and what will be the barriers in place for the digital dollar, if you will, going forward?
Yeah. Look, this is really important innovation, or an announcement day before yesterday by ranking member Patrick McHenry, and then on the majority side, Stephen Lynch of Massachusetts, introduced a bill that really builds on work that I and Chairman Clayton at the SEC started back in 2017. We launched a cryptocurrency task force between our two agencies to take a look at some of the early steps in this. It was on an ad hoc basis. Before I left the agency at the end of my term in 2019, I spoke to Representative McHenry and folks on the other side of the aisle about making that task force, putting it on a firmer foundation, perhaps providing some funding for it, and charging it with coming back to Congress with recommendations for a more comprehensive regulatory framework for crypto. And I'm delighted to see that some of those ideas have germinated and resulted in a bill that was announced this week that would do just that. It would take the task force that we started, put it on a more regular footing, but then charge it with coming back to Congress in 12 months with some ideas around a more comprehensive framework for crypto regulation to focus on some of the issues of investor protection, but also what should be the right regulatory structure. And just lastly, you know, regulation can be a competitive advantage if you put markets onto a firm footing. And certainly on a global basis, the United States competes every day for regulated exchanges against our economic competitors. And it's very important that we have the primary and the premier markets here in the United States.
Yeah, I think this is a really important point. This is where I was going to go next. China is also trying to beat the United States in this effort. Assess that, where the U.S. is in that regard, and how important will it be for the U.S. to have a strategy in place as far as digital assets to compete with what's happening in China?
Absolutely, Maria. You know, coming out of the last financial crisis, society, outside of the official sector, society has been experimenting with digital money. They've been doing that quite successfully. Bitcoin is part of that. There's over 3,000 to 4,000 different cryptocurrencies out in operation. Governments have actually arrived relatively late on the scene, but the leading one has been China. China has launched now a digital yuan. There's millions of people in China now using this. There's hundreds of companies involved in this effort. And China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get Yuan digital wallets. They're going to receive digital Yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money. Who controls the digital standards of digital money? And by the way, digital money is the future, and they see an opportunity to control the standards. And that's why we formed the Digital Dollar Project over a year ago to advance exploration of this for the United States. You know, the United States was the leader in the internet. The United States was the leader in the space program. And as a result of that, we had a leading role in setting the standards for those innovations. We need to lead in this innovation as well, so that the standards for the future of money, the digital future of money, are standards that we've long believed in. The rule of law, free and fair open markets, and economic privacy.
This is a really important conversation. The digital dollar, you say, is the future. What does that mean on a practical basis for people spending money, for institutions moving money?
Well, you're absolutely right, because it's both important at the retail level and it's important at the wholesale level. You know, Marie, when you and I grew up, you know, we took a photograph with a camera. We'd have to go to Kodak to get it developed, and then we'd have to put it in an envelope if we wanted to send it to our grandparents, put a stamp on it, drop it in the mailbox. You know, our kids take a photo, a snap on a mobile phone, and they can send it anywhere in the world instantaneously. They're not going to get it developed, and they're not going to the post office. And they don't understand why they cannot do the same thing with money. Why can't money be sent as simply as you send the text message anywhere in the world? And that expectation is driving a lot of what's going on with cryptocurrency. It's driving a lot of what's going on with digital money. And we need to think more ahead where money is going, and that's where it's going. It's going to be a tremendous challenge at the wholesale level. It's going to be a tremendous challenge at the retail level, but it can be done. It can be done. Yeah. And what we need to do is take a leadership role.
Are the U.S. banks, are the U.S. banks and the investment managers in this country prepared for this? Do they have strategies?
Well, so look, people are still going to need banks to make loans. If you've got 100,000 Bitcoin or 100,000 digital dollars, but you need 400,000 to buy a house, you still need to go to banks to use that as collateral for what's called fractional banking, so that banks can lend. And there's still a very important role in that. Now, the role of correspondent banking, that is the role that banks do to verify identities, verify account sufficiency, to move money around the world, that part of banking is going to be challenged by this new innovation. In the same way that Kodak's business model was challenged by the innovation of digital photography. And that's why banks need to get out in front of this and not fall behind it. Because as you know, technology knocks everything down in its wake. You either harness it and ride it, or you get knocked over and taken over by it.
Yeah, this is really, really important. We'll keep focused on this and make sure to communicate the changes impacting our audience. Christopher, it's great to get your insights this morning on this. Thanks so much. We'll keep talking about it.
Great being with you.